Swissborg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. Swissborg.
Hello everybody, welcome back. Let's get started. Just thinking about traditional markets and Bitcoin generally today. No altcoins, no little treats. Just the plain old market really. So yesterday we had the CPI madness, didn't we? Look at the state of that. I think I said what is it? I said yesterday it's going to be like a heartbeat monitor on Red Bull, which is basically what we got. This is your 12. It's a 12-hourly close, but effectively the daily's pretty much the same. We got ourselves a spinning top candle, basically coming down below the support and up to the 10 to the basically a 10 exponential retest there. A little bit lower than I thought it would have been. When we were talking on the Patreon live stream, we were talking about the resistance, well, like a derivatives dream basically. So movement up to the 20 moving average, or the 21, so basically that would have been 28,400, and actually what we got instead was 28,355. Come on, there's not much difference between it. And if we have a look at the confluence on the short-term time frames, the 12-hourly did get the 21 exponential perfectly, perfect kiss of that. So your moving averages, they are the bomb. And also, if we look at this on the 4-hourly, what we see is a 50 exponential retest, 50 exponential retest. So this is the one to think about, the 4-hourly chart, okay? The reason why it's a bit of an issue, not too much of a problem, but a bit of an issue, is that we got a death cross, and that this is the first stage of a death cross retest. So a bearish retest of a death cross. Just like in times of bull, you'd expect to see bullish retests of those. So we got our first golden crossover here, and then I suppose a bit messy, but all the same. In fact, it's very messy. So it's not perfect, certainly not perfect, but this time around it kind of was. So look, what we're looking at here was basically the same kind of setup. We are in a descending triangle, this 50 exponential moving average being your formation, and the bottom support being the 27,200. Yeah, you see wicks below it. So what? That's Captain Noobmaster selling that. But basically, this is the formation. So, you know me, I like to see breakouts of this way before the apex to consider continuation. So, look, we'll just measure it from here. This is the first retest of it. How long have we got till the apex? We've got 7 days, all right? So we like to shave off a good 30% of that, really, to say that that's where we want it. So we've got about 3.5 days before a convincing breakout takes place. If we see a breakout above the 50 exponential moving average on this 4-hourly, I would expect to see that as continuation. And we could also think about a trend line wherever it may be. We don't know where it's going to be yet because it's so early days. Like I say, this descending triangle won't be on most people's radar at the moment because they won't be thinking about it in that term, in those terms, because really you need another retest of it. But considering the 50 exponential has been such a significant top on these two 4-hourly bodies, plus the 12-hourly and even the 10 on the daily, I would expect that this is going to be the trajectory of the descending triangle. So we can think about it in terms of that. We can even draw it in for the most part. Again, moving averages will sort of curve. There won't be a flat sort of 45-degree angle like that, but it is what it is. So yeah, we'll be looking for another retest of the top of this at some point, maybe even today, maybe tomorrow. This is a 4-hourly chart, by the way, so obviously it can happen at any point, really. And we'll be looking for not just the breakout of here for continuation and then basically back up into the 30s. We would also be looking for the RSI to make a break on that too. So it doesn't look all too bad. We've got a fix on this for the moment. Obviously, breakdowns would be the same. If you get a breakdown from here and a closure below 27,000, we'll call it, a 4-hourly closure below 27,200 or 27,000 flat, then yeah, you probably look for continuation in that direction. And again, you know, the sooner the better, really, because the sooner it happens in this formation, the more likely it's going to have for continuation. So if we measure this all the way down, where's the next major levels? We're talking like 25,100 to maybe 24,500. You're losing that. We are actually talking all the way down to 22,000. So we're talking big moves either way. We're in the center of the range. So place your bets now, effectively. If we were to break out from here and go up to the holy grail of about 32,000, 16% drop. If we talk about it from this percent down to this level, it's a 19% drop. So more or less kind of in the center of this range for what was going to be the next big move. Let's take it back to the 4 hourly. Do we see anything here? No, I mean, all these short signals will have already played out. So we are basically sitting around a formation waiting for waiting for the go ahead, really, one way or another. So let's have a think about traditional markets. This is the S&P futures, so the US 500. We've got ourselves a pump signal on the Itchy Cloud on the 4 hourly. That's quite good. We're still above all major moving averages on the 4 hourly, which is definitely good. The daily, what we're looking at on the daily, still above all major moving averages on the daily with a golden cross kicker, retested the 50. Still looking quite good. No bearish divergence, no hidden bearish divergence. All of it looking relatively good, actually. Definitely looking quite good. One thing I'd like to focus on a little bit further, though, would be the potential negative cross here on the Itchy Cloud, which again isn't a bearish thing at all, but it's showing, it could be showing lacking of momentum. So now that we've looked at the futures chart, let's just go to the not the SPX. We'll go to the normal S&P, where all our special wiggly lines are all here. We can extend this because this is going to be relevant. The 4,167 is the current top that needs to be broken. Looking at the chart right now, it does look like it wants to break. There's no reason for me to doubt that this is going to break. The euro has come down a fair amount, and this is something that we look for bounces for traditional markets because the euro affects the Dixie. It's also worth noting that the Bank of England are going to raise rates today. I don't know what they're going to do, but they're going to raise rates. Inflation's rocket high still over here, so I'd be looking for them to raise it to a larger extent, but who knows? Who knows what they're going to do? So that's likely to have an effect on the Dixie. A little effect, tiny effect. The pound isn't like the powerhouse that moves the Dixie. The euro is, just because of the absolute size of the euro in the entire, well, for the majority of continental Europe, really. But yeah, we will likely see some downside on the Dixie due to the raising of rates in the UK. But the euro itself, on a technical basis, is going down below the shorter term moving averages on this daily, with a bounce just below 109, and that's what I would be looking for, a bounce around the 50 exponential. That's likely to encourage the S&P to continue to move up as the Dixie goes down. Let's have a look at gold on the 4 hourly, approached and retested that 50 exponential moving average. It's an entry point in itself. And the daily, what we're looking at on the daily, a 10 exponential moving average as well. So if we don't bounce here, there'll be an entry point around here just above 2009. It's still a bullish chart with the most correlated, I think, to Bitcoin, and I'll be looking for this to continue up as well. So up for gold, probably a bounce, and up for euro after a little further downside, that would be, and general continuation for the S&P. So the broader markets do favor further upside. Does Bitcoin follow suit is the main question. It can do. Just because they want to move up doesn't mean that Bitcoin will. But even though we are technically bearish, which we are technically bearish, that's a bearish retest of a death cross, we are technically bearish on its own chart. The broader trading environment is still actually favorable, so it's not all over for everything else. And whether or not you decide that you don't want to trade crypto or Bitcoin, there's no denying that there's plenty of opportunity in all the other markets. I mean, even just yesterday, stocks and shares and things, I do have a little dabble in some of those. And more than a dabble, to be honest with you. I think it's more than I think. My portfolio outweighs crypto by quite a way. But it's just a much more of a boring thing to talk about, so I generally don't do it. But yeah, I mean, yesterday I noticed that my portfolio for a certain stock, one of my certain stocks, I don't want to talk about it too much, saw it on the Telegram, had shot up 200%. There are basically opportunities all over the place. But generally speaking, crypto does look like a bearish setup. We are in a descending triangle, technically a bearish formation, but it doesn't mean that we can't trade within it. So just like we said when we did the stream on Tuesday, this is our range. It's proven to be effectively still the range. It is a derivatives type of environment, really, because the moves are going to be small in the interim until we break one way or another, where they should have much bigger continuation in either direction once it's broken. But until then, it is a derivatives market. It's a futures market for those of you who want to try and trade leverage, which again, I am going to make some videos about that, risk management and things like that, because I'm going to start talking about an exchange. Got a new sponsor, so because they use derivatives, it's a derivative-based exchange. I don't really feel too comfortable promoting it without some kind of, at least rules to use when trading that kind of stuff. But yeah, it does appear that it's a derivative futures market, really, if you're going to play this range at all, because the range is actually quite small. If we're talking of the triangle, we're talking another 1% down to what, a potential 2% up. It's not much, is it really? Right, so more or less that is it. There's not a great deal more to say about it than that. Yeah, I will leave it with you there. But thank you for watching, guys. Play it safe out there. Overall, things look okay in the broader environment. Bitcoin, until it's broken out of that descending triangle, one way or another, I couldn't tell you exactly which direction it's going to go. But one thing I should actually say, just before we do leave, is this. If you look at the weekly is still pretty absolutely bullish, really. We are above all major moving averages. This is something that people found absolutely, completely ridiculous thing to imagine when we were back down here, when we were below all of them. Who told you where the bottom was? Me. Anyway, yeah, we are still above all major moving averages. Each one of these moving averages on this daily, on this weekly, is a mega support. First of all, we're on the 10 exponential right now. Again, the 10 exponential highlighting this area here, this horizontal trend line, reinforcing it basically. Below that is a 200 simple moving average, a big deal. The 200 weekly, everyone loves that. Below that is the 50, below that the 21, below that the 20, and below that the 200 exponential. All of them are floating above 24,000, which makes it seem way more realistic that we will remain above 24,000, despite the daily having further moves down on the chart to this level down here, 22,300. I would say that the weekly shows way more relevance to continuation of trend than a breakdown and consolidation. But things will change if we do close below 24,000, obviously, and then the daily becomes more relevant. But for now, things don't look that bad. And I give it the royal seal of approval. There's the big blue tick there. That this is a chart that wants to be traded. This is a chart that's in the beginning of a bull market, of a bull trend. That's in keeping with the 4-year market cycle, to which we're all very much aware of. But we shouldn't expect, brand new all-time highs this year. But we should expect, or not be surprised at all, to see, at least the halfway point, mid to upper 30s, get retested once again before the year's out. Anyway, I'll leave it with you there. But thank you for watching. Hope you have a nice day. Take it easy.